Hi, just a weekly update on Mara. So I just thought I'll go through the process that I'd go through if I was looking at a particular ticker. Just the all of the different moving parts of finance that are going to affect them. And the first thing is, probably the strongest pull, is what crypto is doing as the basis of Mara. It's making its money out of crypto. So here with I'm looking at Binance. I've got three different liquidity indicators up here. I really I bounce off all of them. The first one here, liquidity sentiment, really gives us relative liquidity at different times compared to near liquidity. It hasn't been normalised at all. This centre one here, irregular liquidity, is normalised against days of the week and up to 15 periods, and that just irons out. You can see there's a line, grey and dark lines here. That is just the difference between the lit market, being the New York Stock Exchange hours, and the Globex, which is the Australasian and the European hours. Red in all of these liquidities is loose liquidity, and you tend to get flattening or downside after we get red. Also, when we have high liquidity, when we have tight liquidity, we're going into a build, and when we get to the top of a build, we plane out and we go into this zone while it's sitting ready to charge again, and we can see that in all time periods. And we can see that there was a little bit of a charge heading here into the 22nd of February that didn't happen. So just quickly looking at BTC, we can see that we've had quite a tightening here, which has fired up in that pullback that we got around the 8th of April, and since then it has just slowly dropped into a building, and then we've had a little bit of surface liquidity, and that surface liquidity has driven us to where we are now. And again, you can just see here this surface liquidity starting to build here before we've actually had price discovery. It's much more obvious when we're looking here at the actual sentiment rather than the time layered, which is really good for scalping, or the irregular, just to see the difference between the different times that you're in. Obviously the lit markets has the highest liquidity, so it confuses you a bit. Just go and have a look at the other things that I think really relate to Mara. Mara here is the NQ, very similar. I always think of the I always think of I always think of the crypto world as a bit of a vol offshoot, so it's nice to have a look at it. You might see that this is a little bit more difficult to see because it's really traded in the lit hours, so it's either on or off. So the lit hours it's on, and we can see here it's tight, and the Globex is not traded. So if we went to a CFD, we'll probably get a little bit of a broader feel there, just because they're traded more across all of the time zones. So we can see that we're entering into a very tight period before we had this pullback yesterday, and then this pullback came, and we could see that very clearly in the VIX. And I'll just cross across to the VIX and into Capital Com, and just it's interesting to see the periods of about halfway through, which I think is the European Open and the European rebalancing. We have three rebalancing in the Globex hours, and the 9 o'clock in the morning European time goes through to the opening in New York at 9:30 in the morning, and we tend to see the build in the. You can see it's happening at about the same time. Each day we start to see it. So I'm sort of expecting that if we're going to see a build today going into the market, we're just about to start seeing it now as we come in. We'll just go click this over to New York time. We're just starting to see here, it's about 2 a.m. and that's about, here we see it was about 1:30 to 3 we started to see a build, and we see this very clear build in the VIX with it dropping down, and here in the liquidity sentiment we can just see it charging down. It's harder to read here in this particular VIX in irregular liquidity because it is traded as a CFD, traded a lot in Europe, in Australia, where the option trade isn't as big and futures trade isn't as big. We can just see this, the front part of the liquidity going down hard for the VIX, and off it went. We'll just go and have a quick look at where the data is in relation to that. If we have a look at the SPX, We'll start on the long dated, which gives us the actual positioning in the market over a period of time. We can see that the SPX is slowly building. So this side here, you can see there's a couple of gaps here where delta hasn't been in the option. This is open interest of options, and the green options here are the calls, and the red options here are the puts. What we tend to see is we'll see a build in the green, and then we'll get it delta hedged off here. If we see a build that is just on one side, that's a heavy market. So we can see until the 17th, we're actually quite short in the market, the 17th of March. This here is about the 17th of March. And if we look at the 17th of March in here, we'll see it's just starting to come into that bounce. Just about here, the market's changed, and it's started to level out, even though we've seen a lot of banging around. That was when the market really started to even into about the 21st, and then it actually started going short again in the shorter dated. So the SPX is the biggest of all of the pulls within the market. It's the options are somewhere in the order of pushing around a $40 trillion market. So if we have a look, we can see here that the hedging's come off about the 21st. It started to float down. We've had this period here of much heavier hedging going through to about the 17th. It actually does start to pull off here around the 31st before it dropped away, and then we've started to see a build again. We can see that today actually we were opening options across both calls and puts, and both in the money and at the money. I've got a 50 delta filter on this at the moment, so I'm really just looking at the in the money. A very nice, interesting thing to see here is just here we can see this 1295 options that have opened here in a 1 delta. If we go and have a look here, we've got another 1 delta here, and we've got 1297. So we've got a huge straddle across the market here of somewhere around the 1300, 1290 mark. Obviously, there's a couple of odd positions in here. We can see they're in 4s and 2s. So I'd say it's a 1295 saddle, which is a straddle, which is a very large straddle. From the SPX, we'll just go and have a look at Mara. We'll look at the DPI first. The DPI is quite interesting. Let's just take out those buy indicators, which showed us that the bottom was in. So we've had a real build during this period, and if we look at it over a longer period, we can see that we've come off a very heavily hedged period. This is the puts here in the money, very heavily hedged, and people haven't really started taking positions up until really the top, which is quite strange. Around the 20th of February, they obviously thought there was going to be a blow off, but they didn't mind because they were hedged all of that period the whole way down, and they've sort of ebbed and weaved through the month. We've had a little bit of delta increase, but pretty much Mara has now been long most of this period. So this is the top is here about the 23rd of Jan, and the actual gamma hasn't really changed a lot. A little bit of an arc there. There's some buying here, but here we've had much more solid buying. And now we're getting a pullback, and I haven't really checked the details to see if that pullback is 0.5 retracement, which is what the mechanics of Elliott wave theory goes to. Having a look here at the short dated options, so this is where the actual trading happens, the risk happens, not the longer positions, but the come and go weeks, and we can see that we've come off this block at about the start of the month, the OPEX, and it's traded down since then. We've had a good trading period, and then yesterday we had a heavy pullback. But if we actually look over the period of this week, since we had that bump up on the 22nd, so we can see that bump up was an overextension here on the 22nd, where I think Mara was up 20 or 17%. Since that period, we've had some heavy delta hedger coming in. It's rolled off in the calls. Unfortunately, it hasn't rolled off in the puts. We can see that it's just getting heavier and heavier out here wide. We've got heavy in the money hedging, and it's discretionary hedging. And with that, we can see that we've had this price pullback. What's that to do with? Well, I can very quickly, just if we switch back to the other screen, it's got to do with two things. It's got to do with the IWM or the let's have a look at the IWM, because it's just traded in the opening hour, so it's not as affected. The IWM is affected because of the cost of money, interest rates, or to borrow money is affected greatly by short-term changes in the markets. And as we've started to feel again that we've got some possible inflation coming in through tariffs, we've started to see this go up into the red. So even though we've had quite a nice charge here, we haven't got very high, and if we're looking at this 4 hour here, we can see we're already quite in the red. If we go to the 30 minutes, even though we've had a bit of a charge, we can see that we're sitting mainly up here in the red. We're not actually registering anything down here, don't know why, maybe we've just slipped off to the side. And it really was, before we got to that period, we've gone through a really good charging period. We can see here, although we've got price going up slightly, we've had really quite a good tightening in the market as we've had this buying of surface liquidity with not a lot of price differentiation. That has just come to a little bit of a head, and even though we've got some tightening in the market now, it's really got to do with what's happening here in yields. And the yields, if we just hedge them out and have a look at a longer period, the yields are starting to suffer again. They're starting to fear. We can see how high they are here. Even though we've had this bounce, that's just a mean reversion, I would say. We can see here in the we can see how quickly we've come from a very tight position, which is a reactive liquidity, and we've bounced up, and we're now sitting in this quite high area. Here we can see in the 30-year there is some tightening under the surface. Have a quick look at the 20, the TLT. The TLT again, I don't like the shape here. We've got a rising flag. We've also come up in relative over a distant time period in liquidity sentiment. We were up into quite a loose period. Again, we can see here in the irregular liquidity, we're into a loose period. Those are the things that are going to affect MARA. High rates are going to affect MARA because it'll go through to the IWM, and the IWM and the Russell 2000 is where MARA lives. And so between the VIX and the indexes that allow us to go north, Bitcoin, whether it's in favour or not in favour, even though we did have the Carolina Treasury yesterday say that they were going to start building a Bitcoin fund for their treasury rather than just notes and other things that they're holding currently. We did see a rise late into the day, but it's not anywhere near as powerful as the fact that we've got rising rates. As soon as we start seeing rising rates, things like Bitcoin are affected. And yes, Bitcoin at the moment in the shorter dated stuff does look like it's got a bit of a run on here. We can see that we had this tight period here, and now we are seeing it drop down. I'm expecting to see more of a rise than the data showed today, but I might be wrong. We can just see that we've had quite a bit of tightening in all the different liquidity indicators that we use, and we haven't had any price discovery. So going into the afternoon, I'm going to be waiting to see what's going to happen with this. Are we going to get this typical period of tightening going into the afternoon? Let's have a look into the European afternoon. In the lit markets, they open, we get this changeover of the exchanges, and when the rebalancing happens, we get this vol blow off as each day as that rebalancing happens. So that's always a very good one to remember if you want to pick up a trade and you're in the European market, that the VIX really gives you a great eye-opener. So all of this data is coming from Naked Delta and also the different indicators that we use. And if you've got any questions, just bing me on YouTube, or you can get hold of me, Bruce at nakeddelta.com, and I'm happy to answer any of your questions. I hope you've enjoyed the weekly update on where MARA is and what's affecting it. Have a good end to the week's trading. Cheers.